What's up, YouTube? Happy Valentine's Day. Gonna go over my expectations for SPY today, and then throughout the day I'll create that video where I go over how to trade with relative volatility in the frame of what is big money doing, what's theta gang doing, what are the option market makers doing. That'll be especially important for this week while the VIX is currently sitting at 27. And that's not even showing after hours, so VIX is actually sitting 29.5. Yeah. So let's start here quick. First things first, the big thing I always do before any trading week is I check the economic calendar. It's extremely important. I will post a link into a new tab. Let me see if I can pull this up to my screen. There we go. All right. So first things first, this is our economic calendar. I will put the link in the description of this video. I check this every single week. The reason being is it's super easy to see what you have to worry about. So first thing today was bull alert at 8:30. We do have a emergency Fed meeting today, but that's not going to be on here just because it's emergency. And then we can pretty much see the rest of the day is nothing to worry about for the United States. So that stems into Wednesday is going to be the next big day. So that would be our Fed minutes. Comes around to 2 p.m. Pretty much going to see an explosive move out of there. And that should be pretty much it for the week. Then they'll talk about everything. So that being said, with the VIX this high, it's an option seller's market, so I don't know that I want to swing much, but I can kind of gauge what I think is going to happen. Let's take a look at maximum pain. And let's go to the 218 maturity, which is the monthly OPEX. And we're seeing a 450 max pain for 214. 218 should be 452, yeah. Alright, so the 218 series has a 452 max pain. SPY's currently trading for $440 even. It's trading flat from yesterday, or from Monday. And let's pull up my sheet again. Cool. So we're back to SPY. Here I'm going to pull on my after hours and let's talk. So as I mentioned, I think this week's going to be largely bullish, but because the VIX is so high, I don't know that I want to swing much unless it's on the house. So I'm going to trade the week with a long bias. I'll always wait the first 30 minutes just to see kind of where the market wants to go, get my opening range, and then play from there. In the morning I do a momentum trade. They're quick trades. You're not supposed to try to keep runners on them just because the implied volatility is high, and that's talking about intraday wise. It's higher in the morning and then it'll get crushed as the range comes down as the stock consolidates or reverses. So I trade quick in the morning, that's a momentum scalp, and then I wait for a consolidation or a correction pattern to occur, and that effectively will crush the implied volatility. And that's when the market makers will be okay with letting another move happen. So I'll go through all of that a little bit more in depth in videos coming out today. But for now, I will say this. I do expect today to be bullish. And I don't trade on any expectations. I always trade with confirmation bias. So I'll wait to see what the first 30 minutes does and then see if I can't find a bullish entry. And if the day is bearish, I won't trade until we do find that bullish entry, just because I don't want to be fighting big money, and it's a sure thing that big money wants to drive the stock up into Friday. So trading at 440 now, I think we can see a nice 15 to 20 point move higher by Friday to the high 460s, and then a pullback down to the 452. Why would they do that? Well, because the put skew is so fat right now. It's the highest it's been since COVID. And this was at not like the start of COVID, no, I mean like the very bottom of COVID. That's what retail kind of does. They like to buy calls at the very top and then buy their puts at the very bottom. They're the sheep that the wolves eat, right? They fatten them up too. It's kind of crazy. So the sheep got all fat this week. The put to call ratio is absurd. It's like 3 times what it should be. So for expectations for this week, I think we see, even if we are going to go into a bearish market, I don't think they'll leave this money on the table. So I think they'll drive the stock price up. Now, because the VIX is so high, I don't really want to swing things, so I'll look for intraday setups to trade long and then try to get runners on the house so that if I do swing something, it's risk-free. So there you have it. We ran just about 5 minutes, 46 seconds this morning. Maximum Pain and Calendar will be posted into the description below. Let's help each other grow. Make sure to like, subscribe, and share if this video helps, and then stay tuned because I will go through what all this hot zone stuff means, and more importantly, how to trade with the relative volatility index on something like a put, where you can find the direction of the day and then realize, okay, well, if the market makers are the ones selling this, they're trying to sell them when the implied volatility is high and then buy them back when the implied volatility is low. So you can kind of see this price action on the chart. So every time it comes up into the red here, you'll pretty much see a sell off, and that's option market makers and theta gangs selling these calls. And then every time it goes into the blue, they're going to buy them back, and that's when we want to buy. And this is a put, so I misspoke, and that's when we want to buy that put when it's oversold on the volatility index. So pretty easy way to conceptualize the relationship between theta gang and Wall Street bets. You want to bet the same time as them on the opposite side of the coin. So hopefully that kind of clarifies that a little bit, but I will go through that all in just a few hours. Alright, stay tuned. I'll have that video out today, and let's eat.